Hello everybody, it's me the Boss Hog. Today we're going to be looking at my buys, sells and how the portfolio is doing this week. As a little bit of a tease, we are back in EPD. It's one of my favourite income plays and I've made about £1,000 on it and now we're back in to hopefully make some more. Let's do it. Alright, so honestly a pretty profitable week. It was kind of hovering around the zero Monday to Thursday, up and down. I was up about 0.5% by the end of Thursday, and then Friday just was a great day. I'm sure everyone else felt it as well, and obviously I benefited from that. So that was nice. Honestly, I quite enjoyed the calm, or at least felt like relative calm for the first part of the week, and the finish was, I guess, a bit of a bonus. So feeling pretty positive after that. No capital added this week. That was pretty much as expected. I'm still running 3 weeks, so 15 days ahead of schedule. So feeling fine with that. And yeah, no issues there. Also, it's pretty modest trading this week. I think because not much was happening, especially Monday to Thursday, just didn't really see much opportunity. I just mostly sat on my hands basically and rolled with it. So, I did trim one of my positions to do a little bit of buying, including on EPD as I've already let on, and just one or two other things as well. And also, no dividend this week. That was expected. I do have a couple that start to begin from next week and run into July, so I'm quite looking forward to that as some of my US quarterly payers begin. Recently, I've been getting more into my quarterly plays, and for whatever reason, it just seems that a lot of the US ones come in July, and obviously then the quarterly period afterwards. So that's purely fluke, but I'm looking forward to July as well. So that'd be nice. Anyway, let's have a look at my buys. All right, so as I already mentioned, I'm back into EPD. I sold out many months ago now, actually, in the kind of low to mid 24s. I had $28 as a price target for EPD, and somebody mentioned in Discord, oh my goodness, look at EPD, it's really come down a lot from $28. So when I had a look at it, it was, in the high 23s, low 24s, and I am extremely light in my portfolio on oil and gas at the moment. I think it's one of the reasons why I've been underperforming recently. Obviously, it's been doing quite well. Now, in fairness, EPD isn't really one of those, it's not like a super major where it kind of goes up and down with the price of its commodity, right? It's mainly a contract and volume driven business. So it's kind of one of the safer plays, I would say, in the space. It's a pipeline business, one of the largest, about 50,000 kilometers of pipeline, primarily gas, as well as a few other things as well. For me, it's one of the biggest midstream pipelines out there. It's pretty conservative, solid balance sheet. It's been reducing its capex over the last couple of years, and it's got a really solid payout ratio. It's well covered. And to be honest with you, it's kind of been increasing its dividend for the last 23 years, and it does it very modestly. Again, you're not going to be setting the world on fire with this, but it's yielding at the moment 8%. For me personally, as well as a Brit, I don't pay tax on the dividend I get from this particular US stock because it's classed as a MLP. So that's for me is a real plus because there's no 15% tax, and therefore I get the full 8%. So for me, buying here at 24.09 is my current average. I'd like to get it under 24, but I'm fine with it. It's just a good opportunity for me to get back into oil and gas, and also, to have that income play. And I guess, I'm absolutely fine with it. So I'm looking to bring my average down a little bit here, but I would like to build my stake to at least about 60 shares, just so then I get basically a free share every quarter. So that's going to be my target. So currently got 25. I'd like to get that to at least 60. Somewhere around the $24, obviously lower is better, and then enjoy the dividend income from there basically. What I had left over here, I do continue to buy Huntsman, especially under 30. I think that's really at least 20% undervalued. Actually my best performing share, so I feel like I know Huntsman extremely well, and I'm absolutely very comfortable buying under $30. And then I just had a little bit left over, so I just dollar cost averaged into Apple there. It's my only big tech, which is currently red. So for me, it's just a relatively easy buy. And by the way, it's not like I'm up massively on most of the big tech, maybe with the exception of Google, which is doing kind of okay. I've just been averaging into Microsoft and Amazon. And because it's relatively new, I've kind of been catching it whilst it's been falling, which is obviously fine. So that they're starting to turn green now, which is nice. Obviously not very much this week, but again, I just didn't see a ton of opportunities with the exception of EPD. And even then, to be honest, you'll see what I sold. I think EPD is fine. It's comparable to what I sold. And so I didn't really want to jump in a big way or exit from my previous position. So without further teasing anyway, let's see what I did sell to buy an EPD. All right, so I continue to trim my Phoenix position. I've gone from 2,000 shares down to what's currently 900. So after selling this 100, that is. And again here, very modest on the profit. I think Phoenix should be somewhere around 720. So potentially, near enough a 20% upside. But then I also feel the same about MPW that I was buying last week and now EPD this week. And likewise as well, Phoenix and EPD both have a near 8% dividend yield. So for me, it's more or less a like for like in terms of my potential upside, that at least I estimate, as well as the dividend yield. And for me, it's again more of an opportunity just to diversify a little bit. I'm pretty heavy, or I had been pretty heavy on my financials. That's now a lot more respectable, like normal weighting, I would say. And yeah, I'm fine tweaking Phoenix. I still like it for the safety. This is a UK life insurance company primarily, as well as it's moving into wealth management. And yeah, for me, I'm not in any rush to sell down. I think, if it was like, 670 or EPD went down to like 21, 22, I would look to move a bit faster. But as it is, I think I'm actually relatively happy with my position, and for EPD it'll be new capital I'll be adding in July rather than looking to sell down Phoenix at the current levels. So that's my thinking there. So that's all the buys and sells I did this week, but let's have a look at my portfolio, which is much improved compared to how it looked last week. All right, so in terms of my portfolio, a lot of positive movement. You can see here, by the way, I put this into the order of basically its movement week on week, so the second to last column. So most of it's black, but there was a couple that fell, primarily in the kind of consumer discretionary space, which is still under a bit of pressure. Fine. The green here I want to talk about, so I've already mentioned EPD, obviously that's new. In case anyone's wondering, by the way, why the trading figure is 492, obviously that matches with the buy. And then the week ending being 489, that basically means I'm minus £3, right, from my week trading. So that's just in case anyone thinks those numbers look weird, that's why. So it should make sense. The light green here I just wanted to talk about a little bit. So my largest position being Gamma had a pretty good week. I still think it looks cheap, to be honest with you. It's an extremely high quality company. It's kind of got similar return on etc. metrics to the likes of Google. I think it's one of the highest quality telcos that virtually no one's heard of. And for me, it still looks like an extremely strong buy at current levels. So I just wanted to give it some love. It's also going ex-dividend relatively soon. You've got a couple of weeks to get in there, I think. And yeah, I mean, it's not a huge dividend. This is really like a very typical long-term dividend growth play. They've committed to raising the dividend 11 to 15% progressively, and they've been doing that since they listed. So I expect this to be a long-term, very reliable number. And also, as they've been becoming more profitable, their payout ratio has been going down. So, when they first committed to that, their payout ratio was slightly above 50%. Now it's down below 20%. So again, they've got lots of firepower to either acquire more businesses or potentially increase their dividends. So it looks really good from my perspective, and I just wanted to call that out. I'm going to group Amcor, ASML, and Micron together. I think the semi space looks pretty cheap. Not all of it. I'd actually say ASML is hardly cheap, but it's an interesting play. Maybe it's closer to fair value, but it's providing that foundation for the chips, so I think that's cool. Amcor and Micron, I do think are cheap, and I think there's quite a few others in that space as well. Micron specifically goes ex-dividend next week, so if anyone's interested in that. Micron only recently started paying a dividend, and again, I don't really expect it to be in your dividend income play anytime soon, at least not upfront. Maybe dividend growth in the future. And to be fair, similar for Amcor, they increased their dividend recently by 25%, but off an extremely low level, so it's still not, yielding particularly highly. But again, I think these companies are going to be in need, and I think the business in many ways is becoming less cyclical. So again, I think it makes future revenues a lot more certain. And the likes of Amcor at the moment is trading on a 6 PE. Micron isn't much above that. So yeah, I think that's discussed. Now they did have a good week, to be fair. But I still think they look incredibly cheap. And even though Amcor is one of my largest positions, that's especially a company I'm looking to add to. And indeed, Micron, I never really expected to have. I think I've got 62 shares in Micron at the moment, but it just looks really great value. And I've just been averaging my average buy price down. I'm on something at the moment like $64, so definitely still in the red. But I feel really good about Micron as well. So again, that's another company I'm looking to buy more of. Another company here I just want to mention, or fund, sorry, is SMT, Scottish Mortgage Investment. This is like a UK favourite. I think it's run by Bailey Gifford. And it just has a lot of tech exposure. It's also got quite a lot of exposure to China. It's kind of my only play. They had a bit of a stabilization week, I would describe it as, but again, I'm looking to average down into SMT. It looks, I don't want to say it looks cheap, it's not, but at the same time, it's kind of now more affordable, maybe fair value, and a lot of what it contains, there's a lot of growth potential in there as well. So it's kind of one of my long-term tech funds, basically. I think it's quite popular among UK investors, but yeah, I think this is also worth looking at the moment. And last but not least is Redrow. Obviously, this was red for the week. Redrow is a UK house builder. It's my play in the area. I wanted to talk about it though because Berkeley, which is another UK house builder that I don't own, released results that I would say were very solid. They're actually the largest London builder, specifically Berkeley. And their share price just got beaten up, even though, you know, it was like better growth, more dividends, better projections, better macroeconomics, etc. Obviously, there's some cost pressures, but UK house pricing at the moment is still only going one direction. Maybe there's some concern that it's reaching levels of not being affordable anymore, but so far I'm not really seeing that. You know, and an Englishman's home is his castle. It's one of those like aspirations that Brits, not just the English, but Brits, I think, really aspire to. And for me, I think, you know, you can almost just like throw a dart at any UK house builder at the moment and probably do okay. And for me, even though I'm down about 10% on my Redrow position at the moment, I'm again looking to buy. But again, I think you can basically check out the entire sector, decide where you're most comfortable. For me, I chose Redrow because it's actually starting to move away from London. So it's kind of working on having more units, but with a lower sales price. It believes that it can kind of recycle that quicker and basically grow more. So it'd be interesting to see whether that materializes. Again, it looks cheap, so that's why I just wanted to kind of talk about it and I guess flag the whole area. Anyway, a very short video this week. I had a really long video this week, last week, sorry, so maybe I'll save your ears any more bashing. If anyone wants to talk about any of these, I'm always happy to do so. Otherwise, I've been the Boss Hog. Good luck with your investing and all the best. Thanks for now.